Hi everyone, and welcome to another episode of the Scottish Property Podcast. This is actually a recording from our Monday night networking event. We do this every month on the first Monday of each month, and this month we were talking about the Aberdeen property market. It was a really good chat. We had some great guests on. Unfortunately, I managed to forget to hit record in the first 2 minutes, so we're going to enter the chat just as Kessar Salimi is giving our mortgage update. We then have Arshad Ali talking about home reports, which is useful tips for people who are starting out in property about all the ins and outs of the home report. We then have Chris Minchin of Winchester Lettings talking about the ins and outs of all the whole Aberdeen property market. We've then got Stephen Clark going into some case studies and some numbers on deals that he's done. So hope you enjoy this recording. It is quite a long one, but what I'll do is I'll slice it up into segments in the show notes. So I'll give you the timestamps of each individual speaker and you can jump in and out as you please. Hope you enjoy, and I'll just cut straight into the chat. Cheers.
Potentially extend up to a maximum of 6 months, or if you've not taken it already, you can take it now as well. So obviously, because the new lockdown rules that have come in place, but same rules like last time, only take it if you do need it. Is there if you need it, but again, especially on the buy-to-let side of things, lenders are asking, have you taken a mortgage holiday? And if you have, it could negatively impact you. So really, I would say it's only there as a last resort.
And would that apply to, like, say, for example, you had a limited company, right, and you were buying buy-to-let under limited company. You as the director, if you take a mortgage holiday on your own home, for example, would they look at that for applications if you're buying a company buy-to-let?
Yeah. So some will ask you, have you taken a mortgage holiday on any of your properties? That could include your residential one. So absolutely. So residential or any buy-to-lets or limited company ones as well. Just any of them across the board. They're asking the question.
Yeah. I mean, I think obviously people were thinking, landlords especially were thinking, they might need to, take the mortgage holidays. But, obviously tenants seem to have not been defaulting too much on rents. In my experience anyways, they seem to be making the payments. So that's quite good. What about self-employed? Like, I heard there was like self-employeds were kind of struggling, and some of the lenders are kind of, looking into them a bit more and kind of reducing the loan to values and stuff. You heard anything there?
Yeah, absolutely. But really only affects the sort of residential side of things. If you're
Oh,
going to
right.
buy a house for yourself,
Okay.
buy to let, because it's generally kind of stress tested on the rent, it doesn't really make much of a difference. But definitely on the residential side of things, if you're a restaurant owner, barber, hairdresser, or have a nightclub or something like that, that's been really affected. They want to see business bank statements now and seeing that you're actually earning an income just now.
I'm just thinking about those people who are doing flips. Obviously you've got to look at who you're selling to, and if
Absolutely.
it's going to be somebody for, a residential home, you want to make sure that they're going to be able to get the mortgage on it. And I think, Stephen's probably been through this recently with his flip in Kinross, and I know you were kind of really doing the background work there, Stephen, eh?
Yeah, putting the work in the background to try and get a cash sale, which it looks like it's been secured up front. So I'm not really playing to the market conditions, just hoping got the sale, get it secured and get the missive signed within a couple of weeks as well.
Yeah, something you definitely want to be doing if you're doing flips. Just right, let's move on to kind of investor mortgages.
Talk about the kind of Aberdeen market, because a lot of lenders are very unique with Aberdeen, and a lot of them will kind of see it as the press market. They go in and out quite often in Aberdeen, and you've got to reevaluate every time you go for a new application or a refinance. Is that right?
Yeah, totally. So there's loads of things that are different about Aberdeen. So absolutely. So I think key things is if you're going to, invest in Aberdeen, use a broker that is knows the area quite well, because it is completely different even to the rest of Scotland. And obviously we've got limitations in Scotland already, Aberdeen more so. So the main sort of worries that lenders have is when you're buying stuff at such a big discount, so Aberdeen's probably one of the only places in Scotland where I've seen, people are managing to buy properties significantly below the home report. So lenders are wanting to kind of get a bit of a background on that. Why are you getting such a big discount? Is it a distressed sale? That sort of stuff. Some lenders, like the Mortgage Works Nationwide, they have a sort of a flat thing. If it's 10% below, what the asking price, they'll just decline it. So yeah, that's a key thing. Personal name lending is not so much of an issue, but limited company, definitely there's a lot of restrictions there. So some of the big lenders in limited company don't lend in Aberdeen. So like Shawbrook, Precise, and some of the others have restrictions as well. So if you're buying in limited company, you really want to do your background to make make sure that you do have lending options available for you.
So who are the main ones then, Kessar, in Aberdeen?
Well, and there's those options. I mean, personally, you've got pretty much the pick of all of them, but limited company, the mortgage works are a good one. But again, they do have some things that they don't like, the below market value being one. Apart from that, Aldermore are okay with Aberdeen, but they're not allowing capital raising on remortgages just now. So if you're doing the buy, refurbish, refinance, then you might have some difficulties there. Paragon will do some lending in Aberdeen, but they're quite picky about what they want to pick. The mortgage lender as well. So there are a few others, but there's not as many options as you have in the rest of Scotland, to be honest.
Yeah, so it's certainly worth bearing in mind when you're looking at investing in Aberdeen, and make sure you're getting your lending secured or a decision in principle up front.
So,
Yeah,
so
totally.
the lenders then just see it obviously as a riskier option. Is that why they're a bit cautious then?
Yeah, I mean, some of them pulled out, when the property prices crashed, I know you're going to talk about it later on. Well, it didn't crash, but it dropped, obviously, 2015, 2016 sort of time. So Precise and the likes, they kind of moved out of the market then. Shawbrook, they felt that they were overexposed in the area, so they moved out. So the mortgage lender, who are a Glasgow-based lender, they are funded by Shawbrook as well. So again, they've kind of restricted lending. So, and some have restrictions on postcodes as well. Some will lend in Aberdeen city centre, but won't lend in Aberdeenshire as well. But yeah, in general, they just don't understand the market, and therefore have just decided not to lend there.
And you've obviously dealt with a few mortgages up there, so you're seeing it quite a lot. The home report values, the home reports could be like a couple of years old because properties have not sold and all that. I mean, sometimes you're seeing these huge differences between the home report values and actually what they're asking for the property. So I guess you really need to be super cautious and do extra due diligence when you're trying to obviously go for the mortgage, because they're going to send, the lender's going to send their own valuer out, and obviously they're not going to go anywhere near probably the home report if it's been sat there for a couple of years, are they?
No, so typically they'll only lend at the purchase price. So sometimes people get a shock if the property was on for 100,000 initially and now you're only buying it for 50. The lender will only lend at the purchase price. But the key thing is a lot of people looking to add value to this property and then refinance it at the new higher valuation, and that definitely is possible. And I feel like Aberdeen's probably one of the only places in Scotland where you can really do that quite well. The buy, refurbish, refinance model. But again, lenders are kind of quite cautious on that as well. Why is there such an uplift in value? So they want to know what sort of stuff you've done. They want a schedule of works before and after, at the cost of works as well. And the key thing is to have good comparables in the area as well, because yours might be kind of sitting at the 100 grand again, but is there other recent sales at that sort of price? If there's not, you might not get the end valuation.
What's your tips for that when they come back to you? Oh, by the way, guys, just before we finish up with Kessar, get your questions in the comments here before we finish up on the mortgage stuff. If you want to ask any questions, get them fired in. Kessar, what's the advice when you're dealing with people when the lender asks for like schedule of works? Because a lot of people won't really know what that is. So basically, what is that?
Yeah, I mean, every lender has their own version of what they accept as a schedule of work. So ideally, if you've got a builder, a main contractor on board, they'll be able to do a good detailed schedule of works. But if not, even just an A4 sheet of paper, just letting them know exactly what you've done. If it's a new kitchen, new bathroom, painting, decorating, all that sort of stuff. And then also a breakdown of the costs of that as well. So, they just really need to kind of, for their own compliance as well, show that this is the reason why there's been uplift in value. So it doesn't need to be too complex. It could just be, A4 piece of paper or an Excel spreadsheet.
Or a spreadsheet or something like that. What about photos, like before and afters, if you're doing renovations and stuff like that? They ever look at photos, or is it?
Some lenders do. So, some of the ones that will refinance in 6 months will ask for photos as well. Some, out with that, but typically they'll just rely on the surveyor when they go out on the, the new valuation. They'll just be happy with that. But definitely take photos anyway, just in case they're called on.
Yeah, I think we've talked about this before, but obviously if you're doing this strategy in Aberdeen, which seems to be very popular, they kind of buy, renovate, refinance and rent, or rent and refinance. I can never remember the order of it. The BRRR strategy, I think that a lot of people say that if you provide a pack for the surveyor coming along, so that could be your comparables in the area, before and after photos, schedule of works of all the stuff you've done. Sometimes it can help. Sometimes they'll just turn their nose up at it and go, what are you talking about? I don't need that. You're trying to tell me how to do my job here? No, thanks. But I've heard mixed reports. It's always worth trying, isn't it, with the surveyors?
Totally, yeah. And to be honest, it varies from surveyor to surveyor. So, all the guys that are investing in Aberdeen, they'll know the good surveyors and the bad ones. Well, not the bad ones, but the ones that just won't accept it. So,
yeah.
yeah.
Cool. Right, is anybody, Stephen, you got your eye on the chat here. Have you got any questions, anybody, for Kessar before we wrap up the mortgage stuff?
No questions was coming through, mate.
We got Arshad in yet? Arshad Ali,
Yeah.
he was supposed to be the next speaker. Is he
Yeah,
still?
Arshad's in, yeah.
Is he? Right, good stuff, excellent. I can't believe that he was on another Zoom and was late for our one. I hope he told all the other people on the other Zoom to come across to our one.
Kessar, Darren Simpson's asking, he's had a few lenders that wouldn't refinance off a bridging loan. Is that been a common thing?
Yeah, so some have that in their criteria, so definitely checking that before you do apply for a remortgage. Just make sure that they do allow refinance off a bridging loan. So yeah, unfortunately, if he's already applied, then he might have an issue there. But there are others that do allow that, so that's
what's the reason for that, Kessar? Sorry.
They just have that in their criteria. Some just aren't comfortable with bridging finance. Just although you're refinancing to pay off the bridge, they're just not comfortable with the fact that you bought a property with bridging finance to start off with. Yeah. Like I know NatWest for one don't like it, so a lot of mainstream lenders don't, unfortunately.
No, so thanks for that, mate.
No problem.
Is there anything else you want to add, Kessar, before you?
I think kind of comments wise, there's a few comments there saying about TMW having issues there. To be honest, TMW, so they're part of Nationwide. They've been super busy. Typically, what would take for them, a mortgage within sort of 3 weeks, they're now taking kind of 6-7 weeks. So they are getting more pickier with the type of lending that they're taking on. So, a couple of these people have kind of maybe had issues with that. And, we're feeling the same. They're scrutinizing property portfolios. They're asking questions if you've got, multiple limited companies, what you're doing in the other limited companies as well. They're not like in layered finance, layered companies as well. So if you've got shares in other companies that are associated with that company and stuff as well. But I think the key thing is doing your research beforehand and making sure that all that's ironed out before you actually submit the application. You shouldn't really have an issue.
Cool. We've got a couple of comments just come in here the last minute. Karen Simpson said, can you refinance to the new value with the same lender? So
yeah, you can. So either you can ask for a further advance or if you're doing a product transfer, you can ask for a further advance at the same time. It depends if you're in limited company or personal name. So in a personal name, you can do a further advance, but in limited company, you'd have to wait till the end of your initial rate period. But yeah, absolutely, you can do that as well.
And would that be, would you have to wait usually 6 months as well if you were?
Yeah, so typically, like in personal name, 6 months, limited company, because there is no further advance options, either buying it with cash or bridging or waiting the 2 years normally.
Okay. Everybody's coming out the woodwork now. Are you seeing these questions here? James Watson, TMW have started insisting on business plan, cash flow projections and investment strategy breakdown. I think that was more of a comment. So that's interesting. What are thoughts on lenders' timescales going forward with the new lockdown restrictions? Interestingly enough, well, you would have heard what's happening in the news, guys. Obviously, England's going into pretty much in our full lockdown from Thursday onwards. Wales are there in their circuit breaker, and I heard that Wales have basically stopped all valuations and estate agents from operating. So they're going like really hardcore. England, apparently, they're still keeping the property market open from Thursday, but all other kind of non-essential shops and all the rest of it are closing down. So it'll be really interesting to see. I think this week, obviously, Nicola Sturgeon's got obviously make some big decisions and on the kind of whole lockdown thing. In Glasgow at the moment, we're in tier 3 lockdown start today. Estate agents, letting agents are still able to operate, but the interesting thing is, amongst the general public, there is a kind of perception that like we're not allowed to really go out and do viewings and stuff like that. So I think that's going to have a real impact. And obviously, if she announces more tougher measures this week, then that also is going to have a bigger impact on the housing market and the property market. I can't keep up with these. I can't chat and keep up with these.
That's fine, mate. There's no more questions coming in. It's just kind of comments.
Questions done. Right, Stephen, I think we need to make Arshad a co-host so that we can get him on next. He's going to be talking about home reports coming up next from Arshad Ali. Kessar, thank you very much. That's been really great chat. As always, mate, you've been really good to get a good insight into what's going on. If you can stick your contact details up in the chat, if anybody's looking to get a mortgage arranged, then go and get in touch with Kessar.
Thank you very much. Thanks,
you cover the whole of Scotland, don't you, mate? Or the whole UK, or what?
Yeah, whole UK, but specialised definitely in Scotland. Yeah.
Yeah.
So I'm based in Dundee myself, but yeah, all over Scotland.
Yeah, that's one thing about, mortgage brokers, accountants, and all that, guys. When you're building up your power teams and stuff, you don't necessarily have to get somebody that's local to your area. Now, especially with Zooms and all the rest of it, you can do meetings and stuff. And so it's just, it's not important to have to get somebody local. Right, have you tracked down Arshad? Right.
Yeah, we're good to go.
Thanks, Kez. Cheers, man. Stick about if you want, but you don't need to, all right? Cheers, buddy.
Thank you.
Cheers, Kessar. Thanks, Nick. So today, I'm just going to check to see if everyone can see this.
Just for the benefit of the listeners, just tell everybody, obviously, are you going to tell everybody who you are anyway?
Yeah, don't worry about that. I'm just checking, can everyone see the slide? Is that okay?
Yes, brilliant.
Perfect, thank you. Evening, everybody. Arshad Ali, Asset Leading Investments. Tonight, what I'm going to do is give you some insights into property. So tonight's focus is on the home report. I'm not going to go into major depth. I'm going to sort of give a whistle-stop tour of how I review a home report from the eyes of a property investor. But also, there's a lot more layers to this because it's like a bit of a detective. You read it once and then you join the dots along with other things. So whether you agree or disagree with home reports, they're an important part of the process if you want to be a property investor. So I'm going to give you a couple of top tips on that and the things to kind of look out for. So with regards to the home report, if the property is being marketed publicly in Scotland, then it should have a home report. You can request it. I know this might be sort of common knowledge to everyone, but when you can request it from the agent. And so what that is that's been a survey done by a RICS qualified surveyor. So their public insurance indemnity is covered in behind what they're saying. So you'll find it's full of a lot of caveats. Nick would say it's not worth its paper it's written on, but Kessar would say that's what we lend off the back of. So there we go. So number one, I know this is going to sound really silly. Is it the address that you're looking to purchase? Because estate agents are busy and you could end up spending a bit of time looking at something and it's not making sense when really, so the first thing to do is check, is it the correct address? Now, the other thing that you can pick up is the customer address. Is it a bank? Is it an institution? So that, what does that make you think? Is it a repossession? If it below, whereas if it's got a customer's name, then that's where it's someone that owns it looking to sell. If it's got an institution behind it, then that's something to kind of make you sort of catch your eye. I
always do this just to be nosy, Arshad. I always if I see a flip or somebody who's really gone and done up a property in Glasgow, I always just get the home report to see who it is that's done it up. Just out of nosiness.
Well, listen, it's freely available, and that's the point of. So in Scotland, it's the seller pays for the home report and it belongs to them. So that means you have a bit of influence, or your agent has a bit of influence on it. Down south, you have to pay for your own survey. So that's kind of differences in the market. The other important thing to note is who's it prepared by. So here it's Shepherd, which is well known. And so Kessar will attest to this because some mortgage lenders, if the people aren't on their panel, they won't accept that survey or that report. So they might ask you to. So for instance, when I did a mortgage on my own home through Lloyd's, they had a panel that had to select to get a survey done. Otherwise, it wouldn't be valid or worth, or to be able to sort of raise finance off. The other thing is date of inspection. How old is the home report? If it's more than sort of 6 months, you can ask for a refresh. It costs money to the seller, but it doesn't cost as much as a full, because a lot of things can happen and change in the market. So it is something that you can request yourself if you're purchasing property. And it's something to be aware of if your home report starts to get out of date. So as I said, the address there, who's it prepared by, and also what date was carried out. So going on into, this typically tends to be the first page. Sorry if it's a little bit small, but I'll read it out to you. So essentially it's description. So it gives you a good understanding of the property, where it's set. For instance, this is property comprises of a self-contained first floor ex-local authority flat.
Oh, I think he's I think we've lost Arshad. Somebody's
within a 2-story block containing 4. It goes into sort of the. But one of the things. Sorry,
I think we lost you there for a second. You froze.
Apologies. Where did you get me to? This sheet, or was it before?
It's all right. Yeah, just keep going, mate. Yeah, all good. Perfect. I think it was like just a couple of seconds.
Right. Apologies. So the description gives you a good idea of the property, also how old it is, the size of it. But one of the important things to kind of watch out for when you're reading this, and this is what I look for, is the main walls. So is it standard construction? Because this will make a difference towards your exit. So typically if it says main walls are brick cavity construction, rough cast externally, you know that's standard construction, or I'll detail why it's non-standard. So that's why you've got to speak to your broker to see about your exits at the other side before you get into the deal. So one of the important things is the construction type. Now, the other thing, just touching on that as well, with construction type, though it may be difficult to get a buy-to-let mortgage on it, it might be a lot easier for someone to get a normal residential mortgage on it. So, you can see Kessar nodding there. So it's not prohibitive if you get a non-standard property, but just understand the panel that's available to you for lending on the buy-to-let side might be a lot more reduced, so that's why it's important to speak to your broker. The other thing that you'll find is further along the line, it'll have lists of 1s, 2s, and 3s. So just to give you an idea, 1 is almost perfect, or the condition it should be. 2s, it requires a bit of repair or replacement in the future. It's not essential. It's just an idea that keep an eye out for this, because I've had a 2 in my property when I was selling it because there was a crack in the tile in the bathroom, and I'm like, are you kidding me? So that's why it's important, so you could remedy that and get that 2 removed, because some people would just like to see the 1s. That's the ideal place. A 3 is urgent repairs or replacement, and if you don't deal with it straight away, then it's going to cause you problems and expense further down the line. And if it's something drastic, then the surveyor may actually make some comments towards the end. Also, what these things do is they relate to a picture of the property in the survey so that you can see what matches what and what the condition is. So here, for instance, it's got ceiling as a 3. So I would then go back and look at the ceiling. Here it says polystyrene, painted, tiles, also Artex possible, and there may be a chance of asbestos, etc. So that's, with each comment, there's a note attached, so it gives you a better idea. So you can almost price a refurb just off of the home report. Obviously, you have to visit it and everything else that goes along with it, but it gives you a really good idea. Just sort of finishing off the important parts. So in here, you can see this comment: the property forms a suitable security for mortgage purposes. That's what you want to see, because that means that this will hold up and you can get a mortgage on it. The other important thing here is market value in present condition. So that gives you what they expect it to sell for, depending on the demand in the area, etc. You might have to pay over it, you might have to pay on it, but bear in mind, this is what's in the back of the head for the vendor that's selling it. When they see this number that they kind of attach to it, they've got there's a bit of resistance to moving down. Obviously, they love to go up, but there's resistance from going below. So that's something to bear in mind. And the other important thing is I make a condition with my with my solicitor, that do not let me buy a property until I have buildings insurance in place. And that's one of the checks and ticks that we do, because you're spending, tens of thousands, if not 100,000 on a property. You do not want to take it on uninsured. You don't want to take on that risk for the sake of a couple of £100. So that's where the market value, that's where insurance reinstatement value comes in. Now you can see it's a £35,000 flat, but the reinstatement value is 141,000. Why is it almost 4 or 5 times? It's because they'd have to build the whole block. So it's, that reflects if it burnt down, if it's rubble, if there's nothing there. And obviously, since that property was built, the cost of material has gone up as well. And also you'll be building the whole block. So I know that's a whistle-stop tour. I've put my contact details in the chat. If you do have any questions, drop them just now, or you can even connect on my socials or have a sort of 15-minute meeting where I'm happy to kind of discuss things further.
Superbly done. That's excellent, Arshad. Thank you.
Worth the wait, was it, Nick?
No, that was absolutely
I'm
brilliant.
forgiven.
I thought that was first class. You know, at the end of the day, like, we've got to remember that there's people that are just starting out in their property journey as well. We want to help those people. And I think that would be really valuable information. I think personally, we are so lucky in Scotland to have this, like, free information at our fingertips. Imagine, you know, being down in England where they don't have that and you need to instruct a surveyor and all the rest of it. Like, personally, with a home report, I can really, you know, disregard a lot of properties just by looking at them within 5 minutes, just like, you know, going through all the stuff. Like, is it non-standard construction? If it is, then I'm not generally interested, that sort of stuff. So I think we're really lucky to have that. There's some questions here. Paul Kingham, is the if there is a lender, they will want to see your insurance, right? That's a comment. Thanks very much.
So
Paul.
just off the back of that, a lot of the times I'm buying my property with cash. So there's a lender, there's not a lender involved. So that's just something to bear in mind if you are a property investor. Yes, when there's a lender, they will want to see your insurance, but just for your own, because my day job is a sort of actuary, risk analysis, financial modeling. So I'm always looking to mitigate risk. You know, if it costs me a couple of £100 to transfer that risk to someone else, which is worth 150,000, to me, that's a no-brainer.
Excellent, good stuff. Right, guys, we'll just push on to the kind of like the main kind of topic conversation, which is Aberdeen. Now, Aberdeen is a market that hugely interests me as an investor. I don't know about everybody else here, but at the moment, like, if you're in Glasgow or you're in Edinburgh or wherever you are in the country, it is really difficult at the moment to get deals. It seems like pretty much everything that's got any potential or any kind of, you know, potential to add value just seems to be going like over home report. It seems to be going to closing dates, and it just seems to be really difficult to get a deal. But then you see likes of Stephen Clark here, who's co-host in Scottish Property Podcast. He's up and down Aberdeen every week, snapping up all these deals, these kind of bird deals, and you're like, how the hell? Do you know what I mean? And I just haven't been able to get out my mindset of investing in another area of the country. So I'm hoping that this might help me and you guys tonight to maybe see that there are opportunities out there. Stephen put a good thing on his Instagram today about, you know, people who are saying that this has been a terrible year, you know, for them, you know, investing in business and all that. And then you see other people that are really pushing ahead. I think there's somebody else that I see on Facebook, Ella Rad. I don't know if she's in tonight, but Ella and Kessar do a thing as well. Together they host a show, and I see Ella doing lots of business up in Aberdeen as well, lots of property. We'll speak to Chris Minchin as well about he's dealing with a lot of investors. So I'll bring you on to Chris Minchin. And Chris, if you can just introduce yourself and give us a wee... Let's start off with the kind of... let's go back in time to like 2008, right? The last recession, where everything was falling down everywhere around the country. How was it in Aberdeen? And then you can just bring us forward to today quickly.
Thanks very much, Nick. Yes, so everywhere else was burning and Aberdeen was doing well and keeping its head above water. 2008, 2009 crash, I remember it well. I was at university at the time, but also working in property as well. It didn't really seem to touch us. People weren't losing their jobs in any kind of sense. There was a lot of jobs out there. I mean, very kind of simple jobs going for really, really big levels. A lot of people moving to the city. A lot of people from Newcastle, from Merseyside, from Glasgow coming up to the city to work Monday to Friday. And you know, the place was pretty much a ghost town at the weekend as everyone kind of disappeared off back down the country with a paycheck. Obviously, there's a lot to talk about tonight. There's going to be a lot of kind of generalizations that I'm going to make, but there's a lot of nuances to what I'm going to say. So I'm more than happy to answer questions. So please do speak up at the end. So Aberdeen is well known for its oil. I don't think anyone can deny that. But especially since 2014-15, when the oil did crash quite substantially, Aberdeen has kind of paved a way, not completely from the oil, but to a lot of other things, and a lot of other industries. Just to name a few: beers and spirits, the production and consumption, fish processing, huge global research hub in Aberdeen that not a lot of people know about. There's the Fishery Research Institute, there's a Marine Research Lab, the Macaulay Institute, the Rowett Research, which has got 3 Nobel laureates, and the European Offshore Wind Development Centre. So a lot of heavy industry, a lot of intellectual industry as well, and a fair share of castles, beaches, golf courses, and distilleries. So I'll go into just touch on what has happened with the market. You know, it's always good to talk about what was, but if you're a letting agency or anyone in property, you'll be in Aberdeen, you'll be sick to the back teeth of people saying, "Oh, I used to get," "Oh, I did pay," and that I'm sure Stephen will tell you that it's a daily occurrence when you're talking in property, but it's something people need to start looking forward, but just remembering what's happened in the past. So sales market, prices are down some 30% in the last 5 years. 2014 was the peak. It was very much a bubble. If you look at any of the graphs, you see it shoot right up and then tank straight back down again. Currently, sale prices are hovering around about the 2007 to 2009 mark. So if you're looking back away, if you're seeing in any kind of graphs and data, you know, that's a good place to start looking at, and you'll notice the kind of the similarities in the prices there. So the big question is, you know, are things going up? Yes, they are. I know Nick has said, you know, this is the only place where prices are going down. Just to shoot him short on that one, the Q2 has shown an increase of 3.5% in house prices. Which
where are you getting your stats, mate?
I'll tell you in a minute. So that's up from Q1. So obviously there's, I think a lot of the pent up kind of COVID related demand has come into the market, and we've seen that 3.5% bring up. But what that has done is it's actually year on year has increased to a 0.9% increase. So very small, but still there. Just treat that with caution. Q1 was down some 2% on Q4 of 2019. My personal thought is it's leveling out, that they're definitely not these steep drops anymore. And we've put our money where our mouth is there. We invested quite strongly in around about November of last year. Obviously, we were calling the bottom of the market then.
When you say you invested, is that you personally?
Yes.
Okay.
So we purchased a number of properties in November of last year. And it's obviously it was large discounts in group purchases there, so you know, quite well protected from any further kind of small drops. Pandemic, we'll see. Time will tell.
It's just a little thing on the side. We don't need to worry about that.
I can go into that in greater depth, but you know, we've only got till 9:30, haven't we? So,
yeah, totally.
So the rental market, so that's the sales market there. Obviously, there's nuances within that. Certain areas within Aberdeen are doing better than others, but I'll touch on that in a bit, just there. So the rental market is doing well. COVID has given us the busiest 3 months we've ever had. A lot of that has to do with people breaking up, you know, households splitting and taking multiple properties and so on, and people basically sick to the back teeth of the property they've been in, and wanting something new and a bit better. In Aberdeen, there's been a historic under-provision of one-bedroom properties. So one-bedroom properties do really well, and if you've got a really good finish, you know, we're talking Instagram-esque, then they're going to do really well, and they're not going to sit on the market for long at all. There is actually an over-provision of two-bedroom properties in Aberdeen. When you're looking at prices and achieved rentals, you'll notice that a poor two-bedroom will probably get you the same amount as a very good one-bedroom. Two bedrooms kind of top out at around about, unless you've got something really special, you know, you're talking 100 square meters West End and so on, they kind of really top out on your bog standard kind of 50, 60 square meters at about 750 to 800. Average for
sorry,
two bedrooms.
sorry, mate. Sorry, before you go on, just I don't want to interrupt your flow, but
No,
just
please do.
obviously it's a chat and we like to kind of jump in and stuff like that. So just give us a rough idea. What's the tenant profile? What kind of is your tenant? You know, what's your kind of typical one bedroom kind of tenant in Aberdeen at the moment? Then for these kind of high end, you know, refurb properties like you're talking.
So young professionals, students, very much students are moving away from large kind of 6, 7, 8 bedroom properties into kind of splitting up and going for the smaller ones. You know, these are students that want a nice property. They're not doing the slumming anymore.
Foreign students, like, you know, Chinese students or?
So Chinese students, yes. There is a lot of Saudi students in Aberdeen, and they generally come with families and have the Saudi government as the guarantor, which is pretty helpful for a guarantor. It's never caused any problems there. Yeah, young professionals, American students, a lot of American students.
So what happened to all the oil workers then? Did they just disappear when the price of oil went down, or what? What's like?
So you had a lot of people kind of commuting into Aberdeen, and they were taking the 2-bedroom properties just for them. And it was one guy in a 2-bedroom property at £1,000 a month. When they all kind of lost their jobs, they all disappeared. They were mainly contract workers, so they weren't staff. The oil companies shrunk down, got rid of the contract workers that they could just say on a Friday, we don't need you on Monday, thank you very much. And you got your staff. Your staff were generally people who already lived in Aberdeen. So they had been there for a long time. They'd maybe seen a few ups and downs in the oil industry and had got wise to it, because this has happened before. It's just when the money starts coming thick and fast again, people seem to forget about it. But the ones on staff were the ones saying, well, yes, the money's there, my money's going up. Maybe I'm not getting £500 a day rate, but I'm quite happy to have a bit of job security because I know it's going to go up and it's going to come down again. I'd rather stay here. So they generally own. And they are settled in Aberdeen and so on and so forth.
Is this what drove the private rental market prices up then, when a lot of these oil and gas companies were using them as company lets?
Yes, very much so. And the West End, so relocation agents, I was going to touch on kind of how the market's working now, and things are coming back. And one of the barometers of how well the oil industry is doing is the number of people that they're bringing into Aberdeen, the number of families they're relocating from Houston, from the Arab Emirates, and so on and so forth. Aberdeen is a hugely multicultural city. And you see so much, and as a landlord, you will be asked some absolutely what you perceive to be absolutely bizarre requests.
Give us some examples.
I think it was no red paint or anything red in the southeast of the property, and the cooker had to be pointing to the north. But when you drill into that, I mean, when you get that request and you're like, I'm sorry, what? You actually ask, and we ask and say, oh, you know, what's the reason behind it? And it was a religious reason. Okay. I can't remember which religion it was, but it was really interesting. And that person said to us, well, this property is no good because the cooker's in the wrong direction, and we can't have this. And I said, right, well, let's get a compass out. Let's work this out. The next thing I know, I'm on a full day runaround with this family with a compass out, going, right, okay, well, this property is going to be no good. This one's actually no, hang on, this works. And eventually you'll find something and go through. And I mean, one of the biggest
you need to put that in your Rightmove description, mate. What way the cooker's facing?
Yeah, it's but the thing is, we had it in 1 year. We had it like multiple times. And that was interesting. And things like bidets to be installed, like handheld bidets to be installed on the toilets and so forth. Yeah. That's all really kind of interesting stuff. What I would say is the city is very transient. I know you central belters will wince at the idea of providing a toaster and a kettle and a microwave to your tenants.
What? I'm not spending £20 on a kettle. What are you talking about?
I wouldn't spend £20 on a kettle. A £5 one will do.
Argos.
Yeah, Argos, yeah, right away. But that kind of it's very heavy on the furniture. I would say out of our portfolio, I mean, we manage around about 600 properties across the Northeast. I would say 4 or 5% is unfurnished. The rest of it is furnished to the hilt. There's, I mean, we're not talking. Yeah,
that's really interesting.
It really is, and that's something you're really going to have to factor in. There's a lot of people that come to us. They hand a property over. There's no washing machine there.
Can you give us a rough budget for furnished? Just rough. I know it's like obviously going to hugely vary, but
I can give you exact figures if you wish. So a 1-bedroom studio will cost you around about £700 to furnish properly. A 1-bedroom. I think I've just done Stevens. I think that was around about £1,000. There was some extra bits put into that, and you'll see the pictures of it in a minute, I'm sure.
Did you buy all that stuff on Gumtree for him? Yeah.
No.
IKEA specials.
You can do it. You know, Wayfair, if you pick very carefully. IKEA. I think we're the biggest customer of IKEA in Aberdeen.
That's a lot of work, mate. I've got to say, you guys, you certainly do. You know, I mean, to furnish a property is quite a lot of work. So you obviously got it down. You've got a system and stuff like that. But you guys are definitely working for your money there.
You've got to drill into the statistics, and I'm quite big on that. I can tell you that if you have a Magnolia property, it will take you 20 days more, and you will get £45 less than if you paint it white and grey.
Wow. So Magnolia's definitely out. I mean, they don't even sell it in Aberdeen anymore, do they?
It's dead. Just don't do it. Don't do it to yourself. There's no point. If you're painting it, you might as well paint it white and grey. And that's the thing with the furniture. You get to know what people want, and if you can just churn that out and say, right, okay, here's a furniture pack, guys. Just save yourself running around and go and do it. Here's what we've put in everywhere else. It works. The figures tell us it works. The response from the tenant tells us it works. Do it. Just order it. You pay for it. We'll pay for it. We'll get it built up. It's fine.
Cool.
So yeah, it's I'm forever driving around with a trailer around this city, shifting stuff.
Yeah, I'm loving these stats, mate. Arshad's saying, love the stats. So that's really good. You obviously know your market inside out. Do you know what I mean? So like this, you just need to listen to your letting agent, listen to the people who are doing it day in, day out. And you're not going to have a property sitting about. You must get landlords that are kind of too tight, are not prepared to pay the money and stuff like that, and then presumably their property is going to sit on the market. They're going to be losing a couple of months' rent, and then they could have paid £1,000 to put some decent furniture in it and get it let.
I've furnished a property before, just off of our own backs, to prove to the landlord that it'll work. Because again, the statistics are there, and the figures are there, and when you've got that kind of volume and churn round and conversation with the tenants and feedback, you can really, there's a lot of information. I would say for any letting agency in the city, any letting agency in the whole of the country, you have so much information to your hand. If you just look at it, package it, you've got so much to give. And the first time I met Stephen, he came up to the office. He was talking about maybe buying one property. I sat down and I said, look, here are the areas. Go for these. This is the finish. This is what you need to do. This is what you need to do. It was only a couple of weeks after I knew and found out that he's done all this before and everything like that. But just take the time. We're a phone call away. The information that we've got is free to hand and free to listen to. If you decide to go through an agent, or if you decide to self-manage, just take heed of it. It's
obviously that's what it is. And Callum Reed's actually asked a question I was going to ask, which was can you drill a little bit into the areas in Aberdeen, like what's the high demand for buy-lets and what
this may be a little bit controversial, but I've got.
We like controversy. We like it.
So. Personally, and looking at the stats, I would avoid the following areas. Torry, I think this needs a bit of explanation. I was quite heavily invested in Torry up until around about 2014, 2015. Luckily, I got out. So, I mean, you're buying maybe about 2012, 2011, between 30 and 40,000 for a 1-bedroom flat, and you were selling in 2014 for around about 85,000 a flat.
Ooh.
And with 3 of those properties, I did nothing. I didn't even decorate. So that has maybe jaded the area, but the statistics on it, I mean, the properties there are back down to the 30, 40,000 you can pick up for, with some work to be done. But your problem is going to be, if you're investing in there, you're really going to be investing in the long run to get the capital growth again, if and when that area comes back into kind of favor. It's so close to the city centre, but there's the division of the river, which is very psychological, of, you know, people crossing the river and heading up into the city. You're going to have to wait a long time to realize your money in capital growth. But in that time, and at this moment in time, your rentals are just dire. They are £300, £350 for a nice 1-bedroom flat. But that is it's a struggle sometimes to get those figures, because there's so much opportunity and so many decent properties in the city centre for your 450, your 500, that people say, well, I don't want to live in Tory, I want to come back to here.
Yeah, okay. So
yeah, so I'll stop bashing Tory, and I said, you know, Tory may work for some people. It really depends what your investment strategy is.
there's people agreeing with you here anyway. You know,
does anyone
Chris,
disagree? Come on.
aye, does anyone disagree? Yeah, exactly. Let's open it up here. Darren Simpson, he agrees. He definitely agrees with the your
Ella
views.
disagrees.
Ella's got to disagree. She owns half a Tory.
She's definitely here. Should we? You want to come on?
Investment. It's really how your investment strategy sits, and the property, and there are some nuances to the streets in Tory. I would say the first part of Victoria Street is a no, but then as soon as you get away from the shops, there's a bit of yes, and then there's a lot of no. Menzies Road is good. Grampian Road is not so good. Walker Road is okay for the first part, but not so much for the later part. So that's where having that conversation with your agents and you know, have a chat with a couple of agents and get that information. I think Ella's going to have a different opinion.
This is good, mate. This has sent the chat. This has exploded the chat box here, and it's created some good engagement with the listeners. So I think we've got about. I think Ella's getting outvoted here, but she's probably about, you know, 3 or 4 to 1 at the moment. But that's fine. That's fine. Absolutely. We're not saying everybody's got their own different view. Might possibly be a different tenant profile, different demographic, maybe.
Definitely so. Yeah, it's just a little bit rough around the edges, and if someone's got the opportunity of paying an extra 50 quid to be in the city centre, they're not really going to be choosing that. But you know, if you're talking about a fully tricked out property that's looking absolutely brilliant, you may get someone. I just wouldn't see as much interest as we would in the kind of 1-bedroom properties in the city centre.
Are we talking more kind of you know, LHA kind of like housing benefit kind of tenants out there, or what?
Yeah, you will do. There's a lot of council housing in Aberdeen, and very, you know, I would say a lot of it doesn't bleed through into the private. There was a big run at one point with the council taking on private rental properties and then putting them out to council tenants and LHA, and managing it themselves, taking 5-year leases themselves and going.
Cool. Let's just balance it up a little bit. You know, because I am a letting agent down here in Glasgow, I do have, you know, quite a few LHA housing benefit universal credit tenants. I do personally regard them as very good tenants. Yeah. You're obviously coming into this time where unemployment rate is going to start going through the roof. You know, they are regarded as quite a safe bet at the moment as well, with the kind of change in universal credit system. Now you can get rent paid direct. You know, so it's not all bad, but obviously.
No, I think landlords' attitudes on a whole have changed and for the better. And it's a simple affordability thing. for us. You know, there's an affordability calculation. Someone can either afford to live in the property or not. If they're coming from a job which is currently under stress, versus someone who is coming through LHA, then you know there's benefits, there's pros and cons, and at the end of the day, you're leasing to people. It's a person profile as well as a financial profile.
What about other areas to avoid, or do you want to go into what areas are doing well?
So I mean, I'll tell you what, I'll change it from avoid to do a lot more research on.
Okay.
Tillydrone, Northfield, Maastricht, Landstract, and Woodside. Now I know there's people here. We've got clients who invest in these areas, and some of them do very well. Especially Woodside. It's not an area that I personally would go into. The figures are slightly stressed for those areas, but they do work, and there are a couple of properties recently in Woodside that have taken on that have actually returned above the average for a 2-bedroom property, even being in an area just down to the sheer quality of what was done and the quirky nature of the property. So, you know, you can make differences in these areas. These areas are, I would say, just be careful with Northfield. There's a lot of non-standard construction around Northfield. But, you know, it depends. Again, if you can pick up a 3-bedroom ex-local authority for 80,000, we can get you 750, 800 all day long. And you might find your transient nature might not be as much. What you will find is, and what we have found in the past, is a lot of people will rent privately while waiting on the list for a council property. So you can have that tenant for, you know, a couple of years, or they could be in and out within 6 months. So yeah. So let's kind of take it for the positive. Good areas for the city, and properties, like areas and streets that do really, really well. Postcode wise, AB15, AB24, and AB11 will give you the highest rental yields. The city centre is good. If you can get parking within the city centre, even better. There's a lot of on-street parking very close to the main thoroughfare in Aberdeen. Aberdeen's a village. It's very small. It's basically 3 streets: Holborn Street, Union Street, King Street, and they all just bleed into each other. So city centre, very good. Union Street is undergoing a lot of investment at the minute. There's commercial properties being flipped into residential properties and selling for really substantial figures, way above what anyone would normally expect in that area. If you can pick up 1-bedrooms on Union Street, do so and develop them into, you know, good Instagrammable properties. They'll go.
That's your phrase, mate. You've got to take that. Yeah, somebody said that's your new phrase, Instagrammable. So
it's what it is. I mean, what was it recently? I was looking through TikTok the other night and found a walkthrough of one of our properties done by the new tenant with 10,500 views on it. So and all the comments were complimentary, and I'm sitting there going, yeah, I furnished that place. It looks pretty good. Ferry Hill does very well. The average for 1-bedrooms and 2-bedrooms there is around about £75 above the city average. For rentals. It's a quirky little area. You're talking not Grampian Road, Caledonian Place, Ferry Hill Terrace, that kind of street names. Bank Street does well. Prospect Terrace. Those properties always lease, and the turnovers are minimal, and you're above the average rental income for those. Holborn Street, mentioned that before. The lower end of Holborn Street towards kind of the bridge and heading out, not so well, but as soon as you start getting up towards, I'm trying to think, 300s. So from the 1s to the 300s does very well. And then you've got the West End just off of that street, the Broomhill Road, and through onto, you know, Carden Place. They all do They all do really well.
Cool. If anybody's struggling to keep up here, we're going to release this as a recording on the podcast, so you can play it back, so you can take notes. All right, guys.
So I'll just read off some average figures now. What I would say in Aberdeen is there's a lot of, with the market being so high, landlords in the past, landlords didn't have to invest in their properties. They could just put it on and it would go. There was times as an agent, if we had 4 properties up for lease in any given month, that was a busy month, because they were just, you'd lease properties before they were even going onto the market. But what you've got now is you've got a lot of tired properties where landlords have taken the money, not invested it in the property and lived off of it. And as such, those are really bringing the prices down. These average prices are easily beaten by newly refurbished properties. And I'm sure Stephen will go on to kind of explain and show you, a couple of the...
Yeah, Stephen's going to bring up some case studies, guys, next. So yeah, keep your eyes peeled for that. What sort of standards and that, and the figures are going to be really interesting as well. So yeah.
So your average 1-bedroom is going to bring you in 463 per calendar month. A 2-bed average is 657. 3-bed around about 1,000, and a 4-bed about 1,300. But bear in mind, there's a large student population in Aberdeen. There's a lot of HMOs in the city, and obviously your 3-bed houses and your 4-bed houses are lumped into those figures as well. So I'll just do a quick touch on kind of the suburbs to Aberdeen as well. You've got Ellen. Ellen does very well. We've got 100 properties in Ellen. I think one every couple of months comes up. Generally, people go there to live kind of long term. Brewdog's head offices are there. I think about 80% of our tenants work for Brewdog, who live in those properties, and it does very well. Nice little town. West Hill, seen as the kind of la-di-da area of Aberdeen, or the garden town. Very well. 3-bedroom properties. Flats don't do that well there. There's not a huge demand for them. But your kind of detached houses there go very quickly. Kingswells, 2-bedroom houses, semi-detached 2-bedroom houses. We put one on this week and we have 47 inquiries on it. And we've had offers above the asking price already. So that also works well for Cove as well. So Cove is south of the city. Again, 2-bedrooms, 3-bedroom houses there do very well. The turnover is nowhere near as high as the city centre flats. Stonehaven does really well. Ex-local authority in Stonehaven. We've actually got a couple ourselves there, and the occupancy rate since we've owned them has been about 98%. So very few turnover there, and a decent yield on those ones. So that's all good. I'm just trying to think where I am now. So what do tenants want? Furniture, the Instagrammable property, and they don't want anything Magnolia.
Cool. That's brilliant, man. Listen, I'm just cautious of time here because we still get Stephen to get on here. Listen, Chris, that was absolutely brilliant, guys. Get your questions in. We'll let Stephen fire through his wee spiel, and then we'll come back to Chris if that's all right for some final kind of comments. We'll get a kind of group discussion going on the market at the moment. Chris said that he thought it had kind of leveled out and things were possibly going on the up. We can have a wee bit of discussion about that at the end as well, and on the general market as well. Stephen Clark, let's go.
Right, the time is on. The pressure's on now. Thanks, Chris. It means I can just rattle through this.
So you're coming on with the sexy stuff, right?
I don't know about that. We shall see. There's a pretty. So in 2018, I kind of completely changed my investment area to Aberdeen. And I was going to go into details on why I did it, but Chris has kind of summed it up pretty much perfectly. I remember back in 2008 and 2009 working in the oil and gas industry, and while the whole world's in doom and gloom and recession and negative talk, you just drive into Aberdeen, and as soon as you hit into Aberdeen, it was RS M4s and M3s and Lamborghinis and Porsches, and you thought there's nothing going on in Aberdeen, and the place was buoyant and people were on ridiculous money in the oil and gas industry, and the economy just never seemed to change. And that was probably the first time that I recognised that Aberdeen was different. But unfortunately, I never really took any note of it until 10 years later. And I kind of came to this point where I couldn't add anything to my portfolio. The prices were going up and I wasn't willing to leave 15, 20 grand in a 3-bed house that a couple of years previous I was managed to get all my money back out at. So I just kind of changed strategies and was flipping properties more and more rather than holding them. And a few things were catching my eye in Aberdeen, and I kept seeing the odd thing come, like Future Property Auction. It was ridiculously cheap, and I just kind of thinking that's like a fraction of what the cost was. So when you worked offshore, the oil price was like kind of the thoughts and negative. It was like a negative impact thing. Everyone talked about the oil price crash, and it was doom and gloom, and there was payoffs and there was redundancies, and it happened it happened quite regularly in the oil and gas industry. But what I didn't really realise at the time was it completely affects the property market as well. Chris explained a lot about the reliance on the oil and gas industry in the property market. Like a lot of the private rental sector was propped up by oil companies just taking on company lets and paying a fortune. And the lack of hotels up until probably 4 or 5 years ago, before they built the ones at the airport, meant that the properties just were, one bed flat set, £750, £800 a month, and now you're only getting £450. So you can see the effects that the oil price does have on the rental market. So obviously the uncertainty in that market has kind of created opportunities, and I started to drive back and forward Aberdeen to kind of explore them. And sitting down with Chris when I first went up to Aberdeen, he was showing me the areas to avoid, and I did pretty much play it safe. I played Union Street, King Street, and the way I really saw it was, well, the oil might have a negative impact on the economy and the rental market, but the student population hadn't changed. So I thought if I played it very much city centre flats, then, and I'd done it to the right standard, because I did notice that everything was so tired and dated and magnolia and pine furniture, and I thought if I could do these properties to a decent standard, more than I'd probably do in the Central Belt for a rental property, then they shouldn't have an issue sitting. So So the reason why I kind of went to Aberdeen as well was I was playing at the bottom end of the market, was I felt like in the Central Belt I was playing on an upward curve instead of a bottom. And looking back at the price index for Aberdeen, it looked like it had kind of bottomed out over, or certainly been dropping further and further over that kind of 4 years that I've been looking into. And now I finally have the option to recycle my cash back out again, which I was struggling to do in the Central Belt. And additionally as well, because the ADS had been brought in and it had been raised to 4% at this time, it was making it even harder for me to find deals in the Central Belt, whereas I just made sure I factored all these costs into the deals I was picking up in Aberdeen by negotiating them even cheaper on the purchase price. And obviously it's given me a lot better yield or return on cash invested. So I've got a couple of case studies I was going to just rattle through very quickly. This one is, I think it was the second or third purchase I bought in Aberdeen. So it's only 100 yards or so from the university entrance. Again, playing it very safe until I understood the market and kind of got to know the streets, all the smaller streets and the intricacies of the kind of microeconomies in the city. But this was purchased at £60,000. And even looking back at this was almost 2 years ago. This isn't even that much a good deal. And this is how much the prices have fallen even more. And the first day that I viewed this property, I actually viewed a 1-bedroom flat in Dunfermline, on Rose Street in Dunfermline, and I got the usual response. Yep, you know how it is. I'll go to a closing date on Friday. And I thought, shit, here we go again. And I drove straight up to Aberdeen, and this was the first property that I'd actually arranged to see that day. I had, I think, about 7 or 8 viewings lined up that day, and the guy took me around. I'd already done my numbers based on it. This property had sold 5 years previously for 100,000. It was on the market at 65, I think. And the agent says to me, well, you know what the Aberdeen market's like. They'll probably take a cheeky offer. And I thought, this is more like the fucking market. I want to be playing about with people trying to go to closing dates and competing when you were getting no one looking at properties, and you were getting to make cheeky offers again. This just was brilliant. So the purchase price didn't really work as at where I was getting it. But I kind of realised that creatively with this kitchen that you can see in the picture was such a large space that I managed to make it into a kitchen stroke lounge area because it was over 16 square meters, and it just to increase the rental income and basically get like a little bit of hybrid end value, not quite 2-bedroom because it's a small 2-bedroom, but certainly above the standard of a 1-bedroom. So the valuation at the time I bought this was 85,000. Purchase cost was $3,000. The renovation to turn it in a 1 to 2-bedroom was 12.5. It wasn't a huge renovation. Moving the plumbing and electric work for the kitchen was the biggest cost. Decorating, new kitchen, new bathroom, decorate throughout. And so the total cost I was in here for was 75,500, and the new valuation came back in at 110 grand. So at 75% loan to value, you can see that I pull all the money back out. I didn't go 75%. I opted for a 70% loan to value, and it just to kind of be under leveraged if the property prices did drop further. Then I was kind of giving myself more of a buffer and a decent positive cash flow and no money left in, which is the kind of deals that I love doing. And this is what I was hunting for, and why the 2-hour drive to Aberdeen was worth it. So Chris Minchin's got a nice little talent with his Samsung phone and making cool little videos up. So he's got a video that I've managed to plug into here, which I'll just play for you just now.
These are the Instagrammable moments. That's lovely, mate. Top refurb. No magnolia in sight.
That was the old kitchen.
Come on, give us some commentary.
The original bedrooms, obviously, as you can see, small. And horrible Amazon furniture.
Wow, that's lovely. Top spec. Is that wet wall?
Yeah, the first time I've ever used wet wall. I don't really like using wet wall in bathrooms, but it's
Looks
quite good
good.
for rentals.
I like the black. I like the black frame shower screen. That's cool. I see a lot of that now. People using that black. Really nice.
Thank you, mate. So this is the first purchase that's made in Aberdeen, and I was so keen that if the market was on its arse, I was keen to pick up multiples. So got this portfolio of 4 flats, basically again Union Street, slap bang in the middle of Union Street. This bit's actually all pedestrianised at the moment, so I'm hoping that it kind of increases the valuation, and the development that Chris was talking about is exactly across the road. So this was 3 large 1-bedroom flats and a 2-bedroom flat. Again, excellent location. I was just playing it completely safe rather than risking anything. The train station, everything's in walking distance from there. Parking's a freaking nightmare, which I never considered when doing a renovation and arranging furniture and stuff like that. I had to go up at 11 o'clock at night where I can park on the bus stop lane right outside it, which was pain. So the asking price for this that the vendor was wanting was 400 grand. Managed to pick it up for 255,000. Purchase cost, again, at the time, the things was getting, this was a couple of years ago, two and a half years ago. So it was getting chucked about that if you buy a portfolio, you can avoid ADS. Well, obviously, this was making me just go for the portfolio, and obviously now everyone knows that it's 6 or more properties to avoid ADS. So I had to pay it on this, unfortunately. So there's high purchase costs with it. And again, playing it completely safe. I kept 2 of the tenants that was in at the 4 flats. One that is still there actually, and is paying kind of old market rent for the 2-bedroom flat. Another one was a kind of cash in hand worker from the seller, who we gave the notice to quit once we renovated the other flat. So it kind of gave it a bit of a buffer that it was already an income producing portfolio. A bit it was, even though it was low. And again, renovated, as you can see from the picture as well, the scaffolding, another roof repair needing done. I think it came about 5 or 6 grand, so split between the 9 flats. It wasn't a huge amount to cost. And we ended up spending a lot of money on the communal area to make that nice and tidy.
You think that was one of the things that was making it stick, the roof repair?
No, it wasn't a major one. It was actually affecting this flat here, which was done. So as you can see, that was a lounge in the place. It's a huge lounge, cracking 1-bedroom flat, complete bachelor pad. I think Chris had actually mentioned about the Saudi or the Qatari government, and we had a student that was from Saudi in this flat, and I'm sure they paid 6 months up front as well on rent, and gave the guarantee from the government. So you do get some cracking tenants. And this was one that I was pushing the market when I'd done the numbers based on this first purchase. The 1-bedroom flats were at 425, 395. Like they were just kind of trying to beat each other to go cheaper and cheaper to get them let. And I thought, I'm pushing the envelope of this straight away, and just said to Chris, look, I want it on at $550 a month. And Chris was like, you know what, that's pricey. It's probably the most expensive one bed flats in the area. But I thought, you know, let's try it. Let's see if it works. It's one that's standing out above everything else in the market. And it went within 24 hours. So it set the kind of tone for the rest of the properties in Aberdeen. So the renovations to kind of lightly renovate the 3 1-bedroom flats plus the communal area and the roof was 30 grand. So I'm all in for 300 grand, and the new valuation came back at 445. The income's obviously increased now that I've got them all let out at new market rents, or except for the existing 1 tenant and 2-bedroom flat that we've left put. So I'm kind of cautious at times. I'm going to rush through this last one here. If you've got me on Instagram, you'll have saw this one was just completed on Thursday or Friday. So I thought I would just share a very recent one as well.
Oh, love the bathroom there, mate. Love that.
Beauty, isn't it? Beauty. This is a 1-bedroom flat at Urquhart Road. And again, this was me diversifying a little bit more and going into different areas. And I spoke to Chris. I mean, it's all fine and well if you know your area and you've invested in the area for a long time. But the beauty of having guys like Chris on and my team, as well as I'll just pick up the phone and ask them on these areas. And I thought this street was horrible. It looks it just doesn't look like a nice street. And Chris gave me a very interesting point, which made me go for this one. And he says that it's the first parking outside Union Street. So this is just off King Street. You come up through the city centre a few hundred yards up the road, and this is Urquhart Road. And it's the first street that doesn't require paid parking. So he says that makes this street very popular for rental demand. So I thought, right, go for it. There's the expert spoken, and picked it up for 36,000, just over 36,000. I think it was 36,250, if I remember right. Renovation was just completed last week for 13 grand. So the total cash in is 49 grand, and there's the finished product. Cracking job by Chris Goymar. He project managed the full refurb, even put his little plants there as a little added touch, give it a little bit of greenery. The end value I'm expecting at 70 grand. And if I do get that end value, 75% loan to value mortgage on that, would be 52.5 grand, which would give me all my money back out, plus a couple of grand profit. I'd probably just go for a 70% loan to value mortgage on that, possibly as well.
Wow, look at those black hinges on the door and the black handles. I love that. Look at that.
Beautiful, isn't it? Really, really, the attention to detail on this refurb was cracking. Done. This will be the best flat on Urquhart Road, that's for sure.
Big shout out to Chris Goymer. I think he's on the call tonight, actually. So
yeah. So the positive cash flow I'm going to be expecting is £270. It is on the market, and again, I've put it higher than I would normally have put on it, which put a wee bit higher just to see if we can get it, and we seem to be getting viewings flooding through. So that is it. If you've got any questions at all from myself and Chris, I'd be more than happy to take them and on these case studies or any other properties you've been looking at or areas you've been looking at in Aberdeen.
There's a couple of questions coming in, guys. Get your questions in. We're going to just wrap up in the next 10-15 minutes. So we'll just kind of get the chat, get the debate going just for the last 10 minutes. So I see there is a question from
Nick. There's a couple of questions we missed before. I just went through the chat.
Yeah, on you go.
I'll fire through them. Callum Reed says, Union Grove, is it any good? Yes, it is. Just watch out for the basement properties. The last lot of rain devastated and flooded about 3 foot into all those basement properties. So yeah, just be careful of that. Someone spoke about Peterhead. Peterhead, if it's a good area, it's not something I've got a lot of statistics on. I've got a couple of friends with properties up there. It generally tends to be a town of two halves, those who have and those who haven't. There's a lot of LHA there as well. There's a lot of properties prime for development in Peterhead, I would say, from what I've seen. One of our clients, Scott Laurie, having a go at me for telling him to paint his flat grey, and I turned him grey. But it's fine because we got one of them leased out well. Liam McDade, landlord furniture, let's have a conversation. And Sarah Kenny said about, touched on rooms to let. It's a section I missed completely here. A lot of the larger HMOs that are looking good but aren't leasing out as a fully what's the word again? Why have I lost it? Come on, help me out here, Nick. A lease where everyone's involved.
What? Say it again. Sorry, I was reading the comments in the chat.
It's gone out my head. A lease where everyone's involved. What's the word for it. I use them every single day. Anyway, so joint and
Leasehold.
several lease. That's the one. Joint and several lease.
All right.
So the joint and several leases on the larger properties aren't going through. So a couple of landlords have split those up into rooms to rent. You know, looking at around about £350 to £400 all in. We've had some of those recently in areas that we didn't think would work well, and they actually have worked very well, to the point where we had 49 interests in one of the rooms that was available. So yeah, rooms to let. Again, if they're looking modern, there's a lot of old ones there. But yeah, just if you can do it up well.
Hang on, there's somebody asking about Peterhead. Do you know that area at all?
Yeah, I spoke about that one there. It's really a town of two halves. A lot of L8K, but there seems to be, from what I've seen, there's a lot of possibility of renovating properties.
We're getting really far north now. Who's saying is asking about Elgin? Did you cover that, Elgin?
Elgin, I have.
That
is about an hour and a half travelling constantly north of Aberdeen.
That's a bit of your patch, isn't it? Yeah, that's nearer to Inverness. I would say that's more like Inverness side, isn't it? That's nearer Inverness, probably.
Yeah, it's still away from Inverness as well.
So maybe we should go Elgin next on the Scottish Property Podcast Roadshow. We'll do a stop. Well, we definitely want to do Inverness. If anybody wants to come on and talk about Inverness for another one, Scott, separate rooms is harder to get a mortgage on.
Yeah, so a HMO leased out, not to one group, and individual tenancies on there. I believe it would be. It's probably going to be harder to insure.
Yeah, cool. Does anyone get any questions for Arshad Ali? Any general property questions? Anything at all, guys? Away from Aberdeen. Somebody's put about Neil Robb's asking, Stephen, as you're growing, are you finding it harder to get finance, Stephen? You do a lot of private finance, don't you? A lot of kind of investors.
Yeah, I'm looking into actual high street bank funding now to try and take on a portfolio, like Bank of Scotland or TSB, but it's something I'm venturing into at the moment rather than trying to stick to like individual like lenders.
This would be like more kind of like commercial loan or something like that. Yeah.
Yeah.
Right. Okay. Got you.
Anybody's got any experience in that, please?
This is Stephen. Just like I'm down here and Stephen's up here now, just like leaving me in the smoke, man.
I've been trying to sell you on the Aberdeen deals this whole year, Nick.
You have, to be fair, you have, man. I need to look at all these figures here tonight. It has definitely motivated, inspired me. Let's just talk about the figures and the market for the last 5 minutes, guys. Arshad, feel free to jump in here, mate. I know you keep a close eye on the economy. You know exactly, you got your finger on the pulse, what's going on.
So just on that, Nick, quickly, I want to ask you, Stephen, you sort of mentioned along there that you didn't go for the 75% loan to value. That was, that really caught my eye. Is that part of a strategy, or what's the thinking behind that? And also, for the benefit of the viewers, why is it you did that kind of thing?
Just to not be as leveraged, rather than pulling it out plus profit. All I'm bothering about is just leaving no money in it, not bothering about the profit, pulling it back out. So yeah, rather than going to a maximum leverage you can go to and the property prices start dropping down, and it limits you for lending when you go to refinance after your fixed term, I thought just go to 70% loan to value. And I'm in the acquisition stage in my portfolio at the moment. Once I've kind of finished in a couple of years, then I'll probably want to try and pay down the debt anyway, and go lower and lower loan to value.
So what's the target with that? Are you, what's the sweet spot for you with regards to the loan to value? Because I think, the viewers here would be keen to kind of see what, how far you're thinking ahead already, kind of thing.
I like having in about the 68%, 70% loan to value. I'm not focusing on it too much because, like I say, I'm still in kind of acquisition stage and want to just keep buying at the moment, probably for another year in Aberdeen. But after that, then I'll definitely try and do some kind of reconciling with the debt, pay some debt down, sell some, overpay. Do you know what I mean? I'll try and knock it down.
No, fantastic. It's just from a risk perspective, because if Kessar was here, he would tell you that after 75% lending, loan to value, you start to struggle with the number of lenders that are available to you. And as Stevens, he's on a growth and acquisition phase. He wants to be in and around there, but just below it, so that he's got the maximum exposure for his exits, kind of thing.
Good point, Arshad.
Guys, a couple of questions I wanted to ask. When you're doing the renovate, refinance and all that, are you getting your end values that seem to be going all right? Or have you had any down valuations? There's talk of things getting a bit harder. Chris and Stephen, any comment?
Yeah, mostly getting them back okay. We have had the one down valuation a couple of months ago, but Chris met with the surveyor. I think it was a friend of his wife, and they came back and gave the exact value we wanted.
Always helps. Did you have them round for dinner the weekend before?
Well, they came back at the 160, which we went for, and this is what we're anticipating. And the lender actually came back and says 145. So they downvalued it, so it's left $8,000 in it, which isn't a big deal. But I think I don't know if it's what's going on. And
right. Okay.
I think you just need to be careful when you're really looking at what you think your end value is going to be, because obviously with the market dropping quite substantially over the last couple of years, looking at something that sold in 2018 is really not going to give you too much of a. You're still going to have to take wax off of that. One of the points. So the ASPC. Aberdeen Solicitor and Property Centre.co.uk or aspc.co.uk. If you look on there, they've got a number of tools, and one of the tools there is the quarterly reports that spans from 2012 right the way up until today, split up by quarter and year. You can have a good look through that and see what the market is doing and what the areas are doing as well. So that's one of the points where I pulled some of the figures off, and I said that is very specific to the Aberdeen area.
Cool. And another thing, Chris, just while you're on, you mentioned about 80% of your tenants in a specific place are like probably employees for Brewdog, I think it was. Obviously with, Brewdog being in the hospitality, bars and all that closing down, hugely affected by COVID. I just wanted to know, with the oil, how much affected, how much of an effect has Aberdeen had in terms of oil and COVID? Like the oil we're still kind of, sorry mate, I'm getting tired now. Yeah, has COVID affected the oil industry much is what I'm trying to get at. Do you know?
I mean, there was not a lot of oil bought during lockdown. I know I saved thousands on fuel just from driving around. But I mean, there's been a couple of companies that have downsized. Again, the oil industry like to use the contractors they've got their core, which is their staff, and then they bring in contractors and then they lay off contractors. And it kind of yo-yos through. There's a lot of oil companies, a lot of friends who work for oil companies. They're just working from home and they're getting on and getting stuff done. As I said, with Brewdog has such a strong kind of almost cult following that if people can't buy the Brewdog in the shops, if they can't buy them in the bars, they'll buy them online. And some of the local breweries have been doing. One of the local breweries, Fierce Beer, did a kind of crowdfund and brought in £150,000 in a week, just to keep them going and keep everything going. And they're very, very good to their staff. And the staff kind of respond in kindness there. Cool. So it's not a bad thing.
So I guess it's prediction time, guys, and like obviously everybody wants to know where the market's going. Is it time to buy, sell? What's happening? So does anybody on the call tonight think that we are not going to suffer some sort of price drop? Maybe not a crash, but a correction. Does anybody think that is not going to happen in the next 12 to 18 months? That'd be interesting to know. And if you don't think it's going to happen, will you come on here and explain why? Because I don't know about you guys, but I think obviously we're still getting underpinned by the whole government stimulus packages and all the furlough. Again, we're back into the 80% furlough. Well, down in England they are. I presume it's going to happen in Scotland again, which is going to keep things afloat. They might extend the stamp duty holiday thing as well, which might still keep things moving. Guys, any other thoughts? Arshad?
So the sort of economists are predicting 14% drop next year. I've just picked up the keys to another one on Friday there. I'm in talks for another one. So why am I still buying? Because you're negotiating keenly at the beginning so that you factor in. So as Stephen has been doing, he's factoring in the potential risk and the drop in the future. That's why he's not going for a 75% LTV. So when I'm purchasing property, I'm negotiating keenly. I'm making sure it's still stacks up with that drop further down the line with the valuation. And also, you don't always have to go to the hill. I mean, when you're buying property, it's a generational thing. It's not a 6-month thing. It's not a 12-month thing. So, you know, what if you leave another year's rent in there? You know, what's the problem with that? It's sometimes we get focused on getting all the money out, but property is a generational thing, and that 1 year shouldn't make or break you. So you just have to plan accordingly. So there's a prediction of a drop, but there's still plenty of opportunity in the market, as Stephen has shown, and so Chris as well, kind of thing tonight.
I think that's probably good comment to end on. Thanks very much for that. You know, and again, guys, we don't want to be negative on, you know, like I've been harping on about it a bit lately, but it's just about keeping your eye on, you need to keep your eye on about what's happening in the wider economy as well, to, like, as Arshad says, to assess the risk, because some of us were around in 2008 and buying properties, and not myself personally, I didn't get burnt, but like I saw a lot of people who came out in a bad way. So just proceed with caution. Chris, anything else you want to add, mate?
I would just like to finish off. Ella has just mentioned it in the comments that she doesn't believe that Aberdeen will see any kind of large reductions. I'm inclined to agree. I think that if you're buying wisely and investing here and bringing your properties up, and that is happening on a big scale. There's more and more people turning up into Aberdeen to do this. I think we're going to do what we've always done in Aberdeen, which is buck the trend of the rest of the UK.
Your dog's certainly bucking the trend anyway, mate. He's dying to get out for a walk.
He is indeed.
So we should probably end so Chris can go away and get his dog walked. So listen, I would like to say a very big thank you to Chris. Chris Minchin from Winchester Lettings up in Aberdeen. Get in touch with Chris if you want to know about the Aberdeen market, if you want to let your property out. Arshad Ali, thanks very much for your input, much appreciated. Stephen Clark, you can listen to his dulcet tones every Friday on the Scottish Property Podcast. Always enjoy listening to you, mate, and I think you have convinced me to invest in Aberdeen. And thank you very much to all you, the listeners, for joining us tonight. You'll be able to catch this on a recording. This will be out probably in a week Friday or something like that. Hope you're enjoying the podcast. If you're not subscribed to the podcast, please get on there and subscribe now. Share it with all your friends. Stephen, how can the listeners get some more followers?
Take a screenshot of this call, tag myself and Nick in it, and we'll share it on our Instagram as well.
Screenshot, guys, and screenshot of the podcast or screenshot of this Zoom call tonight. We will retweet it, not retweet it, like you said. Rethink it.
Late, guys.
Nick's batteries have run out.
I've run out. That's me run out of steam. So I wish I had a dog that I could go out and walk. I would quite enjoy that. Maybe in the future. Right, cool. Let's wrap it up, guys. And bye for now.
Cheers.
Thanks.